Well, I think that the market can contain both rational and irrational, not just investors, but behavior at the same time. I've held strongly the belief for the last month or so that we are now in a bubble market rather than one that's driven by economic or financial data or prospects. But that doesn't mean that it's irrational to participate in this bubble. What struck me, and I wrote a piece about this roughly, I think, 10 days ago, is that the environment today in terms of the market behavior is very similar to the late 1990s, 98 onwards. What we had in late 98 was a very brief collapse in the market caused by the last fling of the Asian crisis, the Russian default, the bankruptcy of LTCM, which at the time seemed to be an event almost as bad as the bankruptcy of Lehman. But once that turned out not to be the shock that was widely anticipated, the tech stocks took off. And once they crossed the previous high, once they exceeded the previous high, it was completely off to the races. Now, that was irrational with hindsight in the sense that the valuations were not in the end justified, and a lot of companies that were worthless went ballistic and then collapsed. But for 18 months or so, it was very rational to participate in that bubble because the Nasdaq more than doubled from the previous highs. I think that's the environment we're in now. A lot of these companies that are going up now are worthless. They will eventually fall back to earth, like Wirecard, Hertz, and so on. But that doesn't mean they couldn't double first. And I think that's what's happening. You're seeing some investors, as in your previous discussion, looking at the data and thinking, well, it's a little bit better than expected. Maybe the bottom has already occurred. We're not going to get a retest of the bottom. And once you come to the conclusion the bottom's not going to be retested, then momentum takes over and you get into a bubble environment like the late 90s, or arguably the other one I've been looking at just now is the late 80s in Japan, which again was a bubble that expanded for 2 years to proportions way beyond what anybody imagined possible. And if you tried to go short in that bubble, you were wiped out.
Can I just draw you on those comments from Peter Navarro and talk you directly to the trade conversation? Because I think investors are nervous about where it goes from here, and Peter Navarro suggesting the trade deal is over. Is he right, despite the retraction from President Trump? Because we only got to phase one. There were still many issues that were not covered, including, the resolution process, access for foreign firms or Huawei, and of course some of the bigger issues around industrial subsidies and China's ambitions for Made in China 2025. None of this has been tackled, and it's hard to see any of it being crossed in an election year with such heated rhetoric between the two nations.
Yes. Well, our view at Dragonomics has always been that the phase one trade deal is not phase one of a larger, a broader agreement on trade. It's all you get, and all it is really is a walking back to some small extent of the extreme protectionism and the tariffs and so on that have been implemented over the last 2 years. So we expect that the clashes over the technology and the general divergence between the American and Chinese economic ecosystems, and particularly technological ecosystems, will continue. But I think the market was reasonable in responding the way it did, because if you had between now and the end of the year a further intensification of the trade conflict, probably driven by President Trump's desire to show that he's tough on China before the election, that would be, yet another blow to a world economy and the US and Chinese economy that are obviously already teetering as a result of the recession. If you just walk back from that, remove the risk of another intensification of tariffs between now and November, and assume that actually it's in Trump's interest to maintain some kind of status quo, at least in relations with China between now and November 3rd, then you've removed that risk at least for the next year or so. Now, beyond November, I think people are going to are already beginning to start to think about what would the US-China relationship be if Trump is not re-elected and you have President Biden instead. And I think that the trade relationship then would be much more predictable and stable. So I think, again, it's fairly rational to see the markets reacting in a bullish way to Trump drawing back from Navarro's very aggressive comments.